Hello, everyone. My name is Ryan Tyson. I'm a financial advisor at Advanced Capital Management. And in today's video, we're going to talk about gains and losses in your portfolio, and more specifically, how the gains required to offset losses increase at an increasing rate. Essentially, a 10% loss followed by a 10% gain in your portfolio does not get you back to where you started. And a 20% loss followed by a 20% gain gets you even further away from where you started. Now, I have a couple of examples to show you to make it easier to understand. Let's start with the example that I just mentioned with 10%. Let's say your portfolio begins with a $100 value, and then there's a 10% decrease in value. Well, now your portfolio is worth $90. Now, let's say you get a 10% return after that $90. Well, your portfolio value is now $99, which is a 1% loss from where you started. You would actually need an 11.11% return from that $90 point to get back to $100. Now, I mentioned 20% as well, and we'll show that example here. So again, let's assume you have a $100 portfolio value, and then there's a 20% decline in value. Well, now you're at $80. Now let's assume you get a 20% return from that $80 point. You are now at $96, which is a 4% loss from where you initially started. So you would actually have needed a 25% return from that $80 point to get back to $100. Now, one more example to show how the gains required to offset losses increases at an increasing rate. So we'll use 50% as an example here. Again, let's assume the portfolio value is $100 and you get a 50% decline in value. Well, now your portfolio is worth $50. If you then get a 50% increase in value, your final portfolio value is now $75. So overall, you are still at a 25% loss. You would have actually needed a 100% return from that $50 point to get back to where you started. Now, the point of this video is not to deter you from investing or make you think that the odds are stacked against you. It's to let you know how crucial it is to protect your capital during down times in the market so that you can reap the benefits of the good times in the market. And that is just one of the many ways we at Advanced Capital can provide value to you. We make sure to protect your capital as much as we can during the bad times so that your account can benefit from the good times in the market. If you have any questions about this video or questions about your overall portfolio, be sure to reach out to your Advanced Capital advisor, or you can ask for me, Ryan Tyson, and thank you for watching this video.